Good afternoon, everyone. Thank you so much for being here. I'm really glad to be presenting to you the Trade Finance Fund of Trade and Development Bank. My name is Umulinga, Karangwa. So, Trade and Development Bank, or TDB, is a multilateral development bank that covers 26 countries on the African continent. You can see that we have a quite vast area of coverage, which is around half of the continent, with Egypt in the north, Mozambique and Eswatini in the south, the whole of East Africa, including the Indian Ocean islands, and on the west we have three countries today: DRC, which we call as West, and four: Angola, Ghana, and Senegal. This is around 40% of the African GDP, or $1.3 trillion, and is also 60% of its population. These countries are growing quite fast, and this is important because this is what is underpinning the growth and the attractivity of the opportunity we have for you today. TDB Asset Management is one of the departments of TDB, and we run funds that invest alongside the bank and that are aligned with its development mission. Everything we do is about economic development, social development, etc. These funds are investing at around 75% in the TDB member states, the one I showed to you earlier. And we have a 25% allocation that we can invest in non-TDB member states. And this is to give us a bit more flexibility because we are raising investor money, it's not our own. And we also want to seize opportunities in those other markets. You can see that these are the numbers of the bank. They're growing quite fast. Over 5 years, it has doubled its balance sheet to $10 billion and also doubled its profits to $200 million. So this is a very attractive area. Trade finance is growing quite fast. It is growing fast because there's a huge gap on the continent that is estimated at $100 billion by the African Development Bank. And this is something that really makes the opportunity to invest profitably in trade finance very attractive because there's a lot of business to be done. Trade finance assets are a variety of products that are going to help trade transactions. The most common one is the letter of credit, which helps an importer and an exporter make a transaction without the risk of not being paid when the product is delivered. And there's a lot of variety of products that are here on this chart that are different from letters of credit, but ultimately it's about financing a transaction between a buyer and a seller and helping them with a financial solution that allows them to trade without risk. This is quite an attractive business, but we also do it because of the impact. Trade creates jobs, trade solves problems such as access to medication, because these have to be imported in most of Africa. So what we do is we are investing in these products because they are profitable, but we also do it with impact. As an asset class, so if you take the lens of an investor, trade finance is quite attractive compared to other things that you could invest in, stocks or normal loans or else. Trade finance is attractive because it has very low default, very low interest rate risk, the risk of you not earning enough interest, and also it has very low correlation to other asset classes, which is attractive for investors because the more the diversification in your portfolio, the better your return. This is simply put as, don't have all your eggs in one basket. You need different baskets, and investing in trade finance gives you access to another profits pool that is not correlated, not linked to stock markets or bond markets, etc. So for investors, that is a very important point. So this is a slide with numbers because it's important to talk about numbers. The return of the fund is very good. It is 10%, which is attractive because you only have to commit for 3 months when you invest. Any month you can divest with 3 months notice. So it's quite a short-term investment, and 10% is a good return. What you can also see that is very important is that those returns are very stable. If you look from 1 month to the other, there isn't much difference. And that is quite good because sometimes when you invest, you want predictability and no volatility. And trade finance with its characteristics helps you invest with high predictability. This is the portfolio of the fund at end of January. So we invest in a variety of countries. You can see that on the lower charts, we are into 12 countries at the moment. But overall, we've invested in more than 17 countries over the past 5 years since the fund was launched. Above, you can see how we are spread across sectors. It's around a third financials, a third corporates, and a third sovereigns, what we call sovereigns. So these are government, mostly parastatals. They can be exporters of cocoa in some countries or other organizations that are owned by government and that facilitate trade. The fund is rated, so this is quite important in terms of assessing the risk of the fund. We have two rating agencies that have rated the fund. One is the Mauritian Local Rating Agency, which is a subsidiary of Care Ratings of India. So this Care Rating Africa has rated the fund AAA, which is the highest rating possible, the safest. We also have a rating from the Japanese Credit Rating Agency. And this one, we decided to take it because the bank last year was raising money from Japan and needed a rating from the bank. So we went alongside the bank and we're rated A minus, which is a very good rating, above most of the African countries' ratings. So this is a signal that the fund is a good investment as per those rating agencies. What they like about the fund is that most of these transactions are what we call self-liquidating, so they don't depend on a borrower's willingness to repay. Once the trade has happened, we will be repaid. There's high loan quality, and there's been only 0.01% default for the past 5 years, which is very low. So I'll spend the last few minutes to talk about the impact that we have. So that is the most important for us. We want to deliver on the SDG agenda. And here I'm going to talk about what we do in terms of reducing poverty, increasing food security, contributing to financial inclusion, and to gender equity. This is one of our borrowers. They are a development bank in Nigeria, and they're very known for the impact on micro enterprises, which account for around 23%, so almost a fourth of their assets. They also create a lot of jobs in Nigeria. In the period where we invested, they created 1 million jobs. Another one that we finance is an Ethiopian bank called Enad Bank. It's a bank owned by women, so 62% of its shareholding is in the hands of women. And it's a bank that has made its mission to increase financial inclusion among women in the whole country. And they have a product that we like very much, which is Loan to Women, where they raise money from people that want to increase women access to finance. And against those funds that are raised, they are going to lend to women for them to finance their businesses. Another area where we have a lot of impact are agricultural exports. Agriculture is the largest sector for Africa in terms of employment, with more than 60% of Africans working in farming generally. And we see agriculture as the main driver of job creation in what we do. So we fund a lot of agri-exports from all over the continent, West, East, Southern Africa also. We fund borrowers that have very fair supply chains. So we look at them monitoring how much the farmers are going to earn. And we also look at the impact of those supply chains on the climate. So we have borrowers, for example, who in their which in their processing plants are going to use waste for energy and etc. And last but not least, healthcare. It's a sector where we also had a lot of impact. We finance the importation of equipment for critical healthcare facilities. For example, in Angola, we funded, with many others, the first veterinary clinic in the country. And in Rwanda, we are currently funding the construction of a very strategic vaccine plant. Thank you very much for listening. I hope I got you interested to investing with us for impact and good returns. Thank you.